Hello everybody, cheers, good morning. I wanted to hop on here really quick. I didn't upload a video last week because I was moving. So I moved, I'm settled in, and it is early in the morning. Maybe not too early, but this is probably one of the earliest videos I've filmed, so I'm a little bit groggy. I have my coffee, but I wanted to hop on here because I got really excited about the charts. We're actually live right now. It's 10:30 Eastern Standard Time right now on the charts. So I just wanted to hop on here really quick and show you guys the optimal trade pattern that I always look for. And even though we're on the 1 minute chart, even though the market conditions are not, they're just not that good. They're very consolidating right now. You can still find 5 handle runs and 5 point moves. And I just wanted to show you guys really quickly like what that could potentially look like. And yeah, I just got really excited because I was like, and I've never actually done like a live trade, like it's not a live trading session obviously, but I've never done a YouTube video where the markets are live. It's always just been like I'm going back and looking. So as we're talking right now, it is 10:24 Eastern Standard Time, and yeah, I just wanted to hop on here really quick and show you guys kind of my optimal trade entry pattern. So let's get into it. So of course we're live right now, so this is all printing live. I use the CME charts, so I think it's like an extra $5 on TradingView, but it is worth it. E-mini S&P, we are now on the June contract, and yeah, I just wanted to point out something really cool. So my trade, if I were to draw it on a piece of paper, kind of looks something like this, right? Something like that. I mean, it's never really that clean, and sometimes, you know, like the market could be up here or whatever, but basically here we're taking out liquidity, breaking market structure, and then somewhere in this displacement run, we have a fair value gap, which we use this fair value gap to target and of course come down to an area of liquidity. So with that in mind, I want to highlight this little run right here. Look, we have a nice push up, comes back down. We have another one back down. Let me redo that. So we're kind of watching the market, comes back up, down. See this low right here? That's important. We come back up, take out this area of liquidity, and of course our daily bias would be shorts because we'd like to see the opening range gap filled in. And we already took out daily equal highs, so that's important. We already took out like a higher time frame area of liquidity, and we have multiple lower time frame areas of like highs, so there's liquidity resting above that. And then of course we drop down, we break this area, we break this low, right here. We break this low, we come back up into this displacement run. This is like classic 2022 ICT model right here. We break this low, come back into this displacement run where the fair value gap is, and then we target areas of liquidity, which would be underneath these lows and underneath this low right here. Let's see. So as you can see, we have this break of structure right here. Comes down, breaks the structure. We have this fair value gap right here. We use that fair value gap as our entry point. And then we get in and we target the area of liquidity here. Let me see if I can erase all that. Nice. Oh no. So I just was really excited because even though we're in sloppy conditions, and I personally am not trading this, I am just watching it, reading tape, kind of, learning. If you look, we put the stop loss always above this displacement candle or the high, whichever one you prefer. I'd say above the high for new beginners. I was a new beginner as well. And we have the entry point, which would be at the bottom of the fair value gap, or you could even do it somewhere in the middle. As you can see, the market actually is really nice. And we closed in this fair value gap, which is actually something that you shouldn't be afraid of seeing. That is true market repricing. Like, that is really nice price action. And then of course our target would be 15, or in this case 20 ticks, which is 5 handles. I kind of like to look and see we have these equal lows, so we already know that those are for sure gonna get taken out. And then we have these equal lows here too. And look what it does. We come down and we take out these equal lows right here. So it's not the fastest delivery, and if you're, let's say you had a limit order in and it came all the way back up and then it came back down before it took you out underneath these equal lows right here, then the trade might be a little scary. But remember, we also want to think about our overall target, which would be to fill in this opening range gap here, because we opened way higher, would be to fill in this opening range gap. Even to get to 50% of it would be a good target, or even just below these lows right here. So with the higher time frame objectives, it's easier to take trades and to be confident in the fact that they should potentially go to your targets. And I'm not saying the market's going to listen to you, because the market has a mind of its own, but in theory, the market should go to these areas of liquidity or inefficiencies. So, in theory. But you know what? With practice, with tape reading, with patience, it gets a lot easier to identify where the market should potentially head. And yeah, it's kind of cool. That's why I just wanted to hop on here really quick, because I got really excited. I was like, this is my trade. This is amazing. Again, I'm not actually taking any trades. I also give you guys a little hint or tip. When I trade, I always trade the morning session. So I'm usually on the charts from 8:30 EST to 12:15 EST. I don't actually trade until after 9:40. But today there was news, and one of the things I look for is if we took liquidity out after 9:30. Where did we take liquidity after 9:30? But since there was news at 10 here, we can think, well, where did we take liquidity out after 10 o'clock? So you see, this is the 10 o'clock time. We came up, we ran these highs here after 10 o'clock, after news, after 9:30. So that could be a key run on liquidity. And then when we break this low right here, come into this fair value gap right here, close it in beautifully. That is beautiful price delivery. And then we come back down, take out these lows, come back down, take out these lows, and then eventually we take out these lows, which would give us a full 5-point handle run. So yeah, even though it's slow and choppy and maybe not the best price action to be trading in, and definitely not the most fun, it's cool to see that these patterns still play out every single day, you know, on every single pair. And just amazing to see classic YouTube ICT 2022 model right here getting played out. So yeah, I hope you guys enjoyed this video, and sorry for my grogginess. It's still early for me and I'm still waking up, so yes. But I hope you enjoy the rest of your guys' days, and I'm sure I'll be seeing you soon. And let me know if you like this video, let me know if you learned something. And again, if you're thinking about trading, really I'd recommend checking out the Inner Circle Trader, because he is my mentor and he has taught me so much. So if that's something that interests you, I would definitely check him out. But other than that, I hope you enjoyed this video, and yes, I hope you have an amazing rest of your day. So cheers to that, and I will see you guys all in the next video. Bye.